Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 36th COT report in 2015. And as usual, we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got sugar on top of our list with a 42% change in commercials position. You can see the change over here. We've got 39% change in large speculators. And you may also see that although this is a huge change, it does happen a few times on this 52 weeks time range. So it is a bearish COT change signal, no question about that. The last major bearish COT change signal, similar size, was back over here, and you may see how well it affected the price. So we may be expecting a very similar reaction from sugar on this change signal. But let's have a look at the 5-year chart and see the extreme situation in sugar market right now. We are moving away from bullish extreme levels, as you may see, of course pretty far away from bearish extreme levels, so we're still closer to the bullish extremes, which of course means we can also expect the continuation of this rally that has started a few weeks ago, as you may see on the chart. So if we know that for fact COT change signals have a short-term effect while extremes have medium to long-term effect, we may of course conclude that we could see a bit of a decline in the upcoming few days, and then possibly a continuation of the rally. It's hard to tell if you look at the chart. Very similar patterns can be found. So whenever the extreme went to close to all-time or larger bullish extreme levels, we saw the end of a decline and then a little bit of a rally develop. But then as the decline continued, the extreme widened towards bullish extreme levels again. Okay, let's move on and have a look at the wheat, the Chicago wheat, where we have a 19% change in commercials positions. In this case, we are talking about a bullish COT change signal. Opening a 5-year chart, here we go. You may see the extreme that is more bullish right now. We still got some space left to really reach those very extreme levels that you can see on this 5-year chart, but nevertheless it is a extreme to talk about. And if you look at the chart, you may see how well the Chicago wheat has reacted in the past towards these COT extreme signals. So I would say that we should be prepared for wheat to go a little bit higher. You may see that in the past we had these signals being pretty effective. Next market, British pound, 17% change over there in commercials position. As you can already see on the chart, we are talking about more of a bullish COT change signal. Last week we also had an even greater COT change in the market, and as you can see, we had a pretty decent rally in the last few days. So this may of course continue, but let's open a 5-year chart and see the extreme. Well, we're more or less in between the two wider extremes, the most bullish one and bearish one at the moment. So we're somewhere in between. I wouldn't say that helps us too much, but the last major COT extreme was bullish back over here, and that started the rally. And of course, if we say that it is in place, we shouldn't be surprised to see the rally to continue. Okay, let's move on and have a look at large speculators COT extreme. We've got live cattle on top of our list with the 126 report extreme, not only in large speculators but also in commercials. Let's open the chart. Here we go. It is a pretty obvious picture. And of course, again, if you look at the chart, you can see how well the COT extreme situation showed us how live cattle is gonna continue its path. So back over here in 2013, we had a major COT extreme, and then we had the rally started. So we are getting to those levels right now. This extreme may of course widen for many weeks before the actual bottom develops, but nevertheless we should have our eyes on live cattle, that's for sure. Next market, coffee, 92 report extreme over there in large speculators. Let's open the 5-year chart. Here we go. And yes, this is becoming something significant. Something significant that, as you may see back here in the end of 2013, ended the decline and started a pretty rapid rally over here. We are getting back to these levels, and as we do, the extreme has gone back to the same extreme levels as back there in 2013. So that's a reminder that we may be in for another rally again. Of course, as I said, in the case of live cattle, we may need to wait a little bit longer before price reacts. But anyhow, I think it's a market that we should be analyzing in the next few weeks as well. Orange juice, our last market for the review, 31 report extreme over there. Opening a 5-year chart, here we go. You can see what that means. Well, it means that we are moving away from bullish extreme levels at the moment. So I think this extreme that we had a few months ago is really the extreme that we should be looking at right now and expecting the continuation of this rally. And that's really all. Okay, that is going to be all for this review. Don't forget, you can have a look at other COT charts at our COT charts page, and of course a more in-depth and detailed COT analysis can be achieved on this page that we're looking at right now. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.